Good morning, everyone. Markets are up here a little bit, but relative to last week, meaningless, basically going nowhere, waiting. uh, Fed announcement, options expiration, Russia, Ukraine, um, things just kind of sitting here. I mean, the end of last week was basically running in place, as you can see, just chopping up and down. And so 422 SPY, you can see at the bottom of the Friday's wide range bar. Looking at the hourly chart, you see the trading range just chopping back and forth. And of course, we're wondering, is anything going to happen ahead of the Fed here? There's sell setups everywhere, which, somewhat of a, conflict is as to so many sell setups. Is it a contrarian situation where there's been, so much selling into that? And, what are the Fed going to come out? There's just a lot of this uncertainty as to, everybody thinks they'll raise a quarter of a point. The Ukraine situation, options expiration here, end of the quarter. And there's so many losing stocks, usually you have this window dressing at the end of the quarter where they buy the winners, but what are the winners to be bought versus maybe not being in the losers, but markets are just kind of sitting here. So things are likely, I think, to be stagnant unless some news comes out, which can make, obviously, for boring, uneventful type of trading. But maybe the spring is being wound here, and we'll see which way things go. Clearly, the trend is down. Just kind of just showing the contraction, and it's not about trend lines, of course, but just kind of like, the ranges contracting here and the lows getting higher and the highs getting lower, and which way is it going to break here? Usually because the trend is down, you assume it's going to be to the downside, but it could just be a big whipsaw. So we'll just see together which way it's going to go. So starting off nowhere, let's look at the futures and we'll get to SPX. You can see the rejection here as it got back up to 4,300, which was a support area, and it broke down. Now there's sellers up there. And so, 4,200 now is the floor. And we'll see if it breaks there. It could be a swift move down to 4,100. And you can see there really isn't much to stop it. But until it breaks and closes below there and starts, usually what happens is it'll just start trading sideways as institutions and traders just wait to see, will it bounce right back up again? Does it hang there? And if it doesn't bounce, then, it comes to, who's going to blink first, and then which way will it go? So again, back to the same bias here as to not much going on until it starts to happen, and we'll all see it together. But right now, this has been the floor, and we'll just have to see if it breaks or it holds here, moves back up, top of the trading range. And if it gets through here, well, we know 4,300 is going to be a stiff area. But if it can, just like we look at a wide range bar, we see a range expansion topping tail bar. Does it stay in the lower half? Does it travel, retrace deep into that? Is it green? And even if it does that, things again are just getting tighter and the trend is down, and we're just waiting to see which way it breaks here. And it's got room to go down. And again, we see it start spending time below 4,200. The assumption is it at least comes down into these prior lows and maybe below. SPX. We know where things are at. We know where the support is. And I didn't even look at the call side because the premium is on the put side. But 42, 43. Well, we'd have to at least consider above 43. Since that's where the resistance has been. There's plenty of premium up there. Well, I guess that's relatively close, so why wouldn't there be? 43.30. I don't think so. Nope. Nope. It's just too close. And down below, oh, 4,075, which, well, yeah, I know what you're thinking there. And I mentioned this last week, McGraw, is that the premiums getting as fat as they are, and the inability to really break to go for that. It's I think okay. It's just that if things start to break, of course, well, the deal. But again, if this starts to break and it starts heading, well, what's this here? 4150. You have that line of defense, of course, 4,100. And this prior low here is 4110-ish, give or take. I'm just putting my crosshair there. It should be fine. It should be fine. I don't think there's going to be, unless, the Ukraine thing, some big news comes out there. I mean, that's the risk. There's always news risk, but just looking at the technicals, I would say it's fine. As to having to go all the way down there and the various lines of defense and open interests and so on. It could be a hairy kind of situation, but yeah, I think that would be okay. And yeah, 65 by 80. Look, the deal. If it starts to break and things look crazy, sometimes you have to bite the bullet. But just considering open interest, considering this low, considering levels, it's reasonable to think that 4090 would be okay. Sure. All right, Qs, same story, just nothing going on here. Oh, there was a little break there, 6 o'clock in the morning. This is weaker. So, keeping an eye on tech, which could lead the way down. So tech, last week, XLF, financials, they broke these lows here. And on weekly charts where things were holding certain levels last week, there were a lot of indices or sectors that closed below. So while things have been whipping back and forth, a lot of these sectors closed below levels that they were holding. So there's a lot of bearish charts. So many sell setups basically everywhere that it's like, is it just too much, or is everything just going to break? So there's this thought of, hey, everybody's thinking the same way, so should we be thinking the opposite way of it? But yet the trends are down and we don't have any bullish scenarios. But just keep in mind that some bullish shock could happen in the market. So we just don't know which way it's going to go, but we make the assumption just based on breakdowns, sell setups, just overall, bearish patterns. Look at the Dow chart here with this topping pattern. That's what I'm talking about. There were rejections of breaking below these lows that came back up over the last couple of weeks. And last week, you can see the bar, while it's not a big range bar, it closed below all of this area, which certainly opens up the door to lower. We just have to see if it's actually going to happen and whether the break starts to, the break actually does start to trigger. And then, of course, where's the next stopping point? And we look to the left and see where there's some, relatively, large congestion area, and that's down there. We first have to break this daily little congestion and see if things just start setting down. And just repetitive here, but Fed, what's the Fed going to do? Well, everybody says a quarter point, they're going to do something. Nobody thinks it's going to be a half a point anymore. So that could be the surprise, if they said, hey, inflation is what it is, let's get ahead of it. And that could be the shock if they, or the surprise, so when we say shock, we mean surprise, the unexpected, that things, actually do sell off. And if I would hope that they would do it, of course, I have no idea that they would, but that kind of scenario where things did go down like that would just set up a counter trend rally and a snapback. So we'll see how it plays out. So Dow futures, which are up here a little bit, but we look at a minder to see, hey, things are up here, they're gapping up. Where are they gapping up to? Gapping up in the middle of nowhere. And it's just in the middle of this bar here. It's meaningless. That's positive, but how positive? It's neutral. It's just trading within a range. And same story of things just getting tighter, winding the spring. And we can see this sort of head and shoulders, really messy head and shoulders kind of a top there. As always, with any distribution pattern, which a head and shoulders is, does it break down through this support line? So we'll see. Russell been showing relative strength. He's chopping around in another trading range here. You can see the bearish weekly chart, see which way it goes. It's positive here, but at the bottom of Friday's range. So, here's a big green bar. Tried to go up, it got rejected. So far, we're holding here. Same situation of winding the spring as to which way this thing will go, one way or the other. Transports, just a big mess. Everything is just messy. A lot of running in place, waiting for the Fed, let's get it over with. And then we can start worrying about the next Fed meeting and the next interest rate hike and the next job report and so on and so forth. And, whatever's going to happen there and the Ukraine and so on. However, I've mentioned, look at the numbers here. Interest rates going up, right? And now you got the 5-year above 2%. So this number is still below these numbers, but they're getting closer together. And that's not a good thing. And, why the talk of recession. And so, day to day, I may or may not talk about, these interest rates, but, you see the minder. So I probably will, if I see this number going above that number, that's going to be bearish. And so we'll just see how that plays out. And just, seeing it from a chart perspective, you see down here, there's the difference between those numbers, the 10-year, the 30-year, and the 5-year, and how this has been coming down and down, going to lower levels. But this is the difference between the 3-month and the 30-year. And so, this is the positive of all the negativity that's going on that still at some point puts a floor under the market. Besides, there's a lot of bearish bets under the market, put options that the market is going to drop. And, to some extent that's a positive, but if those levels start breaking, well, it all starts to unravel. But at some point, what we get is a snapback, so everything's on hold until we get some kind of direction here above or below some support or above some resistance and some kind of event bar. So even things like this where we get these big red bars, well, they're not following through. You get these big bottoming tail bars and they're not following through. So just another way of looking at the same message from different venues. Whether it's large range bars that aren't following through up or down, or we start seeing pivot lows and pivot highs that are getting closer together, and which just suggests or signals that there's going to be continued chop back and forth until things break one way or the other. So putting that in perspective, what's the advantage of it is not to get caught in a directionless, whippy market that is going to chop us up to pieces. However, another vehicle is credit spreads, right? Which we focus a lot on, where things are directionless, and that's a vehicle for short-term income. Just don't let one get away from you. And what else? Covered in Bitcoin, which is doing nothing. It's at the bottom of the range there. Set an alert, see if it starts to break. There has been some correlation between this and the broader markets. Oil's been pulling back. It's at the rising 20 MA. This is what we call minor support. 100 is a big whole number, which eventually it got through and spiked through, and it's coming down to it. So at some point, this is in an uptrend. It got really, wide in range, and buyers will step up here again. We'll see if it holds. It should hold somewhere in this area. We'll see if it makes a turn. And silver coming in, so all of these things that were trending up into with oil reversed, correcting here, and same thing with gold. Had a big run, wide range bar, signaling the end of the move. Not necessarily the end of the trend, but short term, the end of the move. And as prices pull back here, buyers will want to step up again. And, so short answer to all of that is, credit spreads, sit on your hands, very short-term trades, intraday, and we'll see how things unfold here as we get into this Fed meeting. All yours, Dan.
All right, good morning. Yep, Fed and war is what it's all about. And when you talked about upside surprise, I was thinking the same thing, like, wow, every single thing looks so bearish. And that we have to be cautious to be, the opposite side, the contrarian. Let's see here, I'm adjusting a stop on pins. I had a lot of alarms go off from our weekend letter, even with the market gapping up. So that's a testament of us finding good stuff. Right. So kind of the themes here, yeah, oil down across the board. CVX. This was a call spread of ours. It's not a textbook M top, but it's a Climo. Greg just showed you gold was a 180 reversal, and this is kind of building a top after the run where it just can't go anymore. And so now we're gapping down, and I even said this would be a green bar ignored, but it did gap down on Friday and snap right back. But well, see what it does. Keep an eye on it. I'm gonna put that on the window. Let's see our opens here. Well, we're actually flat in the weekly. Pins is the only thing gapping against us. Let's look at other gappers here. China. So China stocks are getting beat up here for two reasons. They're, I guess, having a little corona surge, shutting down some cities. And what else? Oh, the delisting of some of their companies. So that's what started these being weak the other day. So you got BABA, you got JD, That's getting pretty far from the 20. I'm gonna put that in a window. Paul, 237, big gap down. I think this is a commodity stock. Now this little guy I just saw going by the ticker this morning. Look, recent IPO, went to the moon, all-time lows. It looks like it was going to zero. And something's up with it this morning. Let's see if it can hold, take out a 30-minute high. Deutsche Bank was in the news. They're trying to work on, or JP Morgan was working on the palladium nickel problem, not palladium, where the hedge fund lost billions of dollars, and Deutsche Bank had some exposure there. They said Citigroup of the US banks had the biggest exposure. Gapping up here, no real pattern. To some more of these Chinese things getting whacked. YY, that's ugly. That is an ugly, ugly 15-minute chart. But let's watch them and see when selling subsides. These EV stocks were getting hit last week. This one was on earnings. It gapped all-time lows, and it just looks horrible. Look at LI. Something happened on Friday with these things. I mean, they gapped up and then just got slammed. We actually were trading one of them too. I forget the symbol. XPEV, another EV. Look at the volume closing at the low. That's an ugly 15-minute chart, gapping down, going sideways. And there's so much devastation under the hood that looks much worse than the broader markets even. All right, so XOP, that's where our CVX is part of. XLE, these aren't nearly as extended as Chevron. This is a potential bottoming pattern. You know, kind of the opposite of that CVX. That was a Climo, and then we're just watching how it bobbles around here. But now it's gapping over Friday's bar, gapping over, well, Thursday and Friday. And it has a big old price void. So I'm putting that in a window. That looks good. ALV is possible put spread and 30-minute high. AGRI blasted off on Thursday. It's actually a bullish pre-market here. Gapped up, 50% retracement, buy setup, target 450. That's worth watching for a day trade. This utility, buy setup here, gapping up this, yeah, the gap's too big now, but I like the weekly and monthly too. We'll come back to that. You know, I heard Gottlieb on the TV this morning, and I was thinking that I was so happy not to hear Fauci. I haven't heard Fauci in weeks, and that's good. And I read in the paper, I think on Friday, that the journal said the FAA extended the mask until April 18th. And I just sure hope it's coming to an end. Myrna gapping up here, you know, potential bottoming pattern. Made a new low, snap right back, 20 MA starting to curl. FMC, positive mention in Barron's. That was a beautiful closing breakout on Thursday. Let's come back to that. Ballard had earnings, no pattern. So these hotels are getting whacked also because of the China thing. MGM's sell setup. Milko. Wow, look at that. That's wide. No, it's not all-time lows, but That, but look at that crazy ride. You know, we're gonna show Climos, do an MT live on Climactics. This will be a good one. You know, so this is another picture of the retests after a couple of bars with a big void below. That Milka looks ugly. Wind ugly. Look at the monthly breakdown. That no reason that can't go to 60. That's a JD we talked about. LMT. I have Beyond Meat went off. We have so many short alarms going off pre-markets. I'm going to be busy going through these to see which ones are good or which ones have excessive caps. LMT is still strong. Doesn't want to fall. All right, lit sell setup, breakdown weekly, monthly. Oxy was actually holding pretty darn strong. IDXX breakdown, Manpower, kind of sell setup, engulfing. XLC, oh, this is XLC. No, it's XLY. XLY, I put a video on YouTube. We're gonna sell those 159 puts. That's not it. Let me find it. XLY 159. You know what, Greg? I think I totally goofed on that video. You know why? Because I was having bad data over the weekend. And I think my chart when I did that video was showing that gap reversal green bar ready to break out. And now I'm looking at it like, that's not what I did a video on. All right, so let me see where the 159 puts are now, because maybe we don't want it. Because that's a lot tighter than I wanted. All right, 159. All right, yeah, it's not there anymore, so they dropped the bid. All right, so I'm going to say hold off on that. The spread right now is 85, 137. All right, I'm happy. I got to focus on these alarms. They're going nuts. Northern Caribbean, Pac B, both went off here. All right, so XLY, let's hold off. I had put that in both letters. All right, Affirm. All right, Affirm was actually okay now. We can do 5-minute low on that. NCLH. All right, 5-minute low is fine on that. Look at this Mullen here. Look at the Mullen middle chart here. Look at that gap and go. That is a monster double bottom on the daily. Agri needs to settle down.